Hey everyone, Couch Investor here back with another video for you today. So in today's video, we're going to talk about Disney. I've talked about this company a couple of times on this channel. I think last year in July and August, I said their subscriber growth and Disneyplus is going to help them a lot, especially with the parks still closed. But we're going to discuss all of that in this video. We're going to look at the earnings report real quick, the charts, and how 2021 could look for Disney and Disney stock, and as well compare that to Netflix because both of them are going to be and are huge players in the streaming wars. Before I do so, I just want to thank everyone that has been subscribing lately. It's been insane. And if you haven't subscribed to this channel, hit that subscribe button. And if you like these videos, leave it an early thumbs up as it really helps me grow the channel and get my videos out there. And it also helps a good cause. So without further ado, charts first. Right, so looking at the charts, we can see that end of January, when the stock market went down for a day or so, the stock actually bottomed, let's say in the short term, at $160. Since then, it has recovered quite well, almost close to $200. The market pre-market right now is at $194 because of the actually better, way better than expected earnings that we're going to look at in a bit. Overall, I think Disney is a very, very long-term hold, especially with the reopening of parks, hopefully later this year. Also, I want to quickly add, if you look at Netflix and Disney, there's a market cap difference of just about $100 billion as of now. So keep that in mind that Disney is way more than just a streaming platform. It's parks, it's licensing for movies and toys, whereas Netflix is just the streaming platform. Just wanted to show that, so keep that in mind. Now let's jump into the earnings report. So first up, I want to mention that this earnings report does not represent what Disney actually really represents, which is a great childhood, lots of colors, lots of animations. This earnings report looks nothing like that. I've made a tweet and showed them how a very good earnings report looks like. I showed them lemonades and squares, way better, visually way better for people that want to read and want to understand how the company is doing rather than just writing everything like that. But hey, that's just me. So first up, we have the revenue right here at $16.2 billion. Which is down 22% since December 2019, but it actually beat expectations. Expectations were around $15.9 billion, so quite well on that front. Now looking at the revenues a bit more in detail, so Disney's media and entertainment distribution is down 5% to $12.6 billion, which isn't that bad, but obviously the big numbers are going to be from the media side, which is obviously Disneyplus. We're going to discuss that in a bit, but overall, the entertainment one, Soul, I think last year was a big hit for Disney. It certainly helped them with that. Now, Disney's parks, which is usually their biggest segment, is down 53% to $3.5 billion because, as you might know, parks are still closed or mostly closed all around the world. And here we can see the direct-to-consumer segment up 73% to $3.5 billion. Obviously, that's a major improvement and all thanks to the Disneyplus platform. So here's where all the focus is on. So Disneyplus is now at 94.9 million subscribers. Estimates were at around about 90.7 million subscribers. So quite a nice beat there. ESPN Plus at 12.1 million subscribers. Estimates were around 11.5 million. Then you have Hulu and all the rest. Overall, pretty good performance if you ask me. Now, this right here is probably very confusing for a lot of you. If they have more and more subscribers, why is the monthly revenue per paid subscriber going down? Well, the reason is, and I will show you right now, because of this little thing right here. So Disneyplus Hotstar launched on April 3rd, 2020 and September 5th, 2020 in India and Indonesia. The average monthly revenue per paid subscribers for Disneyplus Hotstar is significantly lower than the average monthly revenue per paid subscriber for Disney Plus in other markets. So that is why you see a decrease of the average monthly revenue per paid subscribers. Moving forward, that will obviously change, but as of now, this is how it is. But good news is that in March, Disneyplus subscribers will deliver a bigger revenue boost when the monthly fee rises by $1 to $7.99 in the US and by €2 to 8.99 euros a month in Europe. So this already erases one of my major concerns, was that The platform is great, but still very, very cheap compared to their peers, especially Netflix. So it's good to know and good to see that they're actually raising prices. Maybe not so good for me, but overall for the business, I think it's a very, very good move. And lastly, regarding the reopening of parks. So on the conference call, Disney CEO said the reopening of parks depends on vaccination rates, but added he's pleased with future bookings. Now, regarding this park aspect, I think that if they can reopen most of their parks by the summer, not even at full capacity, I think that could be a huge boost to their business, especially in 2021. I expect most of the parks to be fully open by the end of the year, but you never know what might happen. But just saying that if they can already open most of them by the summer, could be a huge boost to their business. Now, to compare that to Netflix, for example, Q4 earnings were very, very good as well. With 8.5 million paid net addition in Q4, they crossed the 200 million paid memberships mark. So Disney still has a long way to catch up to Netflix, but at least we see that the road ahead is pretty clear. They're growing very, very fast. I don't think this will stop today or this year. I think this year they will grow even further with lots and lots of new shows coming to the Disney platform, with new Marvel movies, Star Wars, Disney movies, Disney originals, etc. Lots of people are going to get attracted to that platform because of the content that they release. Obviously, we have to keep in mind that a lot of movies are supposed to come out in theaters, for example, but might not do so because of the pandemic, so they go straight to the platform. That's a hit to their revenues because obviously box office money is worth quite a lot, but attracting users to their Disneyplus platform might not be such a bad thing. So overall, to conclude, I'm very, very happy with these earnings. I see a clear path towards going back to normal for Disney. I hope they can do so before the summer so that by the summer vacation, parks are already open, people can enjoy going back to, let's say, a normal life, and that will certainly boost morale for everyone, but certainly boost the business for Disney. Overall, I think competition is very healthy. If there wasn't Netflix or Apple or Amazon, we would get crappy content each and every day. With competition, they need to create great content to satisfy their customers. So that's great. Overall, very, very bullish on Disney. I will still hold it for a very, very long time. Let me know down in the comments below what you think about Disney. Do you hold it? Do you want to buy it? What do you think about the company? Let me know down in the comments below. And that will be it for this video. If you liked it, leave it a thumbs up. And if you haven't subscribed to this channel, hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.